All right, guys, welcome back for another video. In today's video, I'm going to try to demonstrate the importance of why you shouldn't put too much emphasis on historical price action and make the case for why, most people in the market do end up doing that. And it's going to go against the grain a little bit of trend trading, but hopefully distinguish between, a trend trading model and the type of trend following model that gets people caught up in the sentiment of the market by overly relying on too much historical price action. So right now you can see that I've got a position open on FTX. I actually put this on right before the FOMC meeting on Wednesday this week. And I have a very specific reason for why I have the screen marked off with the left-hand side right here, because really that's where I believe the market shifted around. And there's a significance of this date. It's the June 30th date, or really in July 1st, you get your quarterly open. And that's a very significant pivot in the market. I've made videos about this before, but I want to, just kind of hammer this point in because it's so important. Quarterly opens and closes are seriously big pivots in the market that really nullify any trend that currently exists leading up to them. And, of course, I'm going to make that case in this video, so hang with me. But basically, you can see here that you get the quarterly open, and then, you have this massive downtrend. Whether you're looking at a daily chart, let's go to a daily chart. Yeah, I mean, a very, very severe downtrend leading into and here's your quarterly open before then, right? So you get a downtrend the entire way, from 48,000 down to, 17,000 at the lows. And then you get your quarterly open, and then the market shifts around. So, you know, this is how the sentiment of the market can kind of get mixed up, is because if you rely too much on historical price action, then you're looking back at these areas and you're thinking, people will think, well, wow, there's just so much resistance above us. I just can't get bullish here because of, they're looking backwards, right? Instead, but if you realize, if you go, okay, well, we've got a quarterly open, this might be a pivot in the market. Literally, the trend is about to be reestablished, right? It's broken at the quarterly open, and it could continue, but we want to refresh our biases and our opinion around that quarterly open, so that we don't hold on to too much, because the market literally can pivot at that level, and we want to be flexible mentally to be able to respond to that. So it doesn't necessarily mean that it will pivot, but it could pivot, and if it does pivot, we need to be open to receive that information. And that's what we see here. We did see a pivot, right? You get this quarterly open, and then price immediately starts reaching for liquidity above the highs, like right away. Bottoms out right at the quarterly open, then reaches up, grabs liquidity above here, sets in a higher low, reaches up, higher high, higher low. You get the idea. And I'm just going to run through I marked off all the quarterly opens, and I'm just going to run through it just for the sake of, being comprehensive, just to kind of demonstrate the idea, right? So at this quarterly open, you started establishing an uptrend, right, off these lows here. So price came down here, consolidated here, and then you get a break of the downtrend and start forming higher lows, like right here, and then higher highs. But then you get quarterly open, right? So if you're thinking here, if you're thinking with a trend-based model, right, and you're not paying attention to the quarterly open, then this is going to happen, and you're going to be thinking, well, this is definitely an uptrend, so I need to be longing every dip down. But really, you get a quarterly open, and the market pivots at that quarterly open. And again, that's why we want to anchor, the side of our chart there, right, to this level. We don't want to focus too much on historical price action because, price is pivoting. Right? We don't want to be looking right here when price is resuming a different trend. Same, right here, again, you don't get the pivot, but even if you don't get a pivot, it still serves as a good anchor for your chart. So we got the quarterly open here. So you don't always get a pivot when you get a quarterly open. I would make the argument that it actually is more likely that you get a pivot, but of course, it's not a guarantee. You can get a quarterly open and you just get trend continuation like you did here. But even if you do get trend continuation, it's still an important level, right? You can see that here. So you got your quarterly open right there, and price at some point comes back up to that level, runs down, runs up, and that quarterly open is a big sell, and then you get a consolidation around here. Let's go check out the one prior to that. So yeah, again, right here, you get the quarterly open right here in October 21st. October 1st, 2021. And prior to that quarterly open, you had a downtrend starting. So we'll just move this over here. That's the day before the close. And you had a downtrend, right? So objectively, right? Lower lows, lower highs, lower lows. But then you get your quarterly open, right? And then you break the trend. Now, just to illustrate why you don't want to use historical price action, we got to go to the weekly chart and just kind of zoom out a little bit and see what we're looking at here. So going back to that level, we have the quarterly open in October right here. Price is downtrending here. And of course, when you're in the market here, right, and you're focusing too much on historical price action, then, you're looking up at this level, right? And you're looking at this as a lower high. And it's very easy to see how the market, can get turned around in a situation like that. But, again, if you start fresh at the quarterly open and you say, okay, look, we just got a quarterly open, like I'm going to anchor my side of the chart to right there, right? Then at this point in the market, everybody's focused on what I just covered, right? All the resistance above, right? But, you get the quarterly open and price just runs and creates an all-time high. It's a characteristic you see time and time again. Again, here, you don't necessarily get a pivot right away, but, you get a little push lower, but then, I would describe this as a quarterly open on July 1st, 2021. And basically the entire duration of that quarter is, could be described as going contrary to this quarter right here. And of course, people at this time, they're, if you're down here, people are looking up at this, right? And they're looking at this historical price action. They're thinking, well, there's just so much resistance above, right? I can't possibly, get bullish here. Well, again, if you just anchor your chart to the quarterly open, then you're not so much focused on the historical price action above, right? You're just seeing, what's going on within the quarterly open. And, at the point where price breaks above the highs right here at the open, right around this 36,000 level, then, you're more in the right frame of mind to be open to what's happening, right? So you can say, okay, like the price is moving upward. We no longer have a downtrend. I want to get long and capture this. Let's move to the next quarterly open. So this one is right before the what I believe is the top of the bear market, and you get this April 1st quarterly open right here, and you get one push above this level right here. This is when Coinbase went live in their public offering, and you get one push above. But then, the quarter is basically spent generally in a contrary direction to the uptrend leading in. Again, it's another example of how, if you're focused on the trend, right, people, would not be prepared for this kind of contrary movement, right? And especially if they're focused on historical price action, right? It's one of those things where it's, you can say this and everyone, it'll be very obvious in hindsight, but when you're in the moment, it's very difficult to think this way. It's actually extremely difficult to think this way. And then, of course, you got the quarterly open here. This is a good example of one where you don't get a pivot. But again, like even if you don't get a pivot, right, there's no harm to anchoring your, this area, this side of your chart to this price, right? Because there's no harm in doing that, right? If you do that, you're still in the right frame of mind to capture what's going on within that quarter. Let's go back. Yeah, and then of course you have this quarterly open here, right? So even within like a massive bull trend, right? If you zoom out, right, you know that this is like the right before the parabolic run up, right, from 10K to 60K. But if you're too in the weeds with price, right, I mean, technically price is in a downtrend at this point, right? You form this consolidation up here. Um, you've got a lows here, lower high. Somebody here, of course, we're operating in hindsight, but somebody here might be thinking, okay, this is like a major swing high on the macro. Price is going to go lower. But again, we get that quarterly open, and that trend doesn't matter, right? The trend changes. So if we just anchor our screen like this, then as soon as the quarterly pivot occurs and starts taking out the highs, whether it's right here or right here, then, you're in a better position to take advantage of what's going on, as opposed to people who are, looking too much at historical price action and thinking, I'm only going to buy when price gets above the highs, which, is fine. I mean, you could do that, but it's just not as good as, being right on the ball and playing around this quarterly open. Again, same deal here. It's not as good of an example of a pivot just because, technically you still do have an uptrend. But somebody could be looking at this, and especially with the duration of time that came between, from this high right here until the final pump, right? You can see how with that elongated period of time in an area that kind of could be described as a downtrend, maybe to need to go down to a lower time frame. But, these drawn out periods of consolidation, they, make people fearful. But of course, you get the quarterly open, and you can just see that price is choosing a direction after that quarterly open, and it's less anxiety inducing, right? You just let price show you what it's going to do, and don't put too much emphasis on historical price action because really it's not going to lead you the right direction. Again, right here, you've got your April 1st, 2020. Again, this is a perfect example really of a quarterly pivot. So right, you just have this massive consolidation, and then of course, price, you get your quarterly open and price goes the other way, kind of bucking this downtrend. People assume that this was the beginning of some mega massive macro downtrend. Well, not really. Just a capitulation, and then you get to quarterly open, take off. Same deal here. Going into here, you have got your quarterly open here. You've got a pretty obvious downtrend coming off from the summer consolidation in Bitcoin, and then you get your quarterly open and pivot. So, you don't want to get too hung up. Again, I know I'm repeating the same concept over and over, but a lot of people here are looking upwards. They're thinking, look, man, like this is a lot of resistance above. The trend's down. It's probably going to keep going down. Well, that's not how the market works, right? There are quarterly pivots, happens right here. So again, hopefully this illustrates how focusing on historical price action really just leads most people astray, right? It gets them into a sentiment that just is not realistic. It tends to be contrary to the market. Sometimes there are certain cases where, it leads you in the right direction, but most of the time it's going to put you on the wrong side of the market. And it's just one of the reasons why a lot of people get caught off sides, right? They're not aware of this dynamic going on. And, just going back to the broader chart, there is another element here with the quarterly opens that I do want to point out to. And you guys might find this interesting. So, back testing, going back to different summer rallies, it does seem like Bitcoin tends to put in a rally around this time of year, right? Whether you call that a seasonal tendency, maybe you think it's just a coincidence. But, last year around this time, we had, you have your June or your quarterly open right here, and then, right, get another down close towards the end of July, but then you get your final, not that your final, but the third weekly close in July, getting towards the end of July, and you get a rally, right? After this, that would be the third quarterly open right there. Massive rally above the all-time highs. And down here too. So actually, sorry, right here. So you get your third quarter open right by July. It's a period of consolidation, brief period of consolidation, but still, you get your late July breakout into a summer rally. It's kind of interesting, it's any reason I come up with for why that might be would be total speculation, but it's hard not to notice that type of dynamic. And if you also look at different seasonal tendencies, you may notice that typically December and April, May, the closes around January 1st, April 1st, maybe more a little bit towards the opposite effect, where as opposed to like seeing a rally in late July, you may see like tops being put in around the end of year close and the first quarter close around the start of April. And my theory to that is, if you do have institutions in the space, you get, massive tax, profit taking for tax purposes, and also reporting requirements. These organizations have their yearly profit and loss and their quarterly profit and loss. And of course, tax season is, towards that end of Q1, around the April 1st date. So a lot of institutions are like making their final, managing their positions down and taking profit. So that's typically, why you may see a top in the market. But, that does operate off the assumption that most of the institutions in the space are on the buy side, right? So that may be a flawed assumption, but it is, in Bitcoin, it would make sense, right? If you're an institution trying to run a short side fund in Bitcoin, it's one of those things where, you may be profitable until the day you're not, and the day you're not is the day that you blow up, right? It's just Bitcoin is not a favorable environment to be a sell side institutional player, just because of the supply dynamics of Bitcoin. Especially when you're trading with that size, right? It's a thing that, you or I or your typical retail person doesn't have to deal with because they're not trading that size. But once you get into that territory, right, especially in a market like Bitcoin, you can get into a situation where you have a major short position, and you just price it undergoes a supply shock, and that's just the end of your organization. You just blow up. Again, total speculation, but just some things I've noticed in the Bitcoin space over the years. These quarterly opens really do impact price, really do serve as a pivot. A lot of times, anchoring your screen to that quarterly pivot, at least in my opinion, has worked wonders for me. It allows me to take advantages of these pivots and not get too hung up in price action, right? So we got, people right now, they may be noticing what's going on at these levels, right? They may be noticing the capitulation that's happened right here and how price is forming a bottom, and for all the bullish reasons we've mentioned before. But, their sentiment is not aligned with the realities in the market because they're looking up, right? And it's normal to think, there's so much resistance above us. But it's just a distinction that, doesn't really exist in the market to the extent that we give it credit for, right? And I should add that, this is not to say that historical price action isn't relevant, right? It's very relevant, especially to add confluence to an existing idea. But hopefully the argument I've made successfully is that we overweight the importance of historical price action, and we put too much emphasis on it. And we'd be better served by, looking more towards what's happening now, right? What's happening currently, as opposed to what has already happened. So it's a little bit of a nuanced topic, but hopefully I've conveyed it well. Again, if you guys like this type of content, please just leave a like on the video, subscribe to the channel, and I'll catch you guys in the next upload.